you in the next 10 or 15 minutes. I own $40 million worth of real estate that I bought without using any of my own money with the BRRRS method that I'm going to break down with you today to a minute level. We're going to start off with 30,000 foot view, talk about the potential of it. Then we're going to break down each letter: buy, rehab, rent, refinance, and scale. This is the way to create financial freedom without using any of your own money. I challenge you to give me one example of how to create wealth without using any of your own money over the BRRRS method that you can create wealth in just a few minutes. So everyone on here, double tap the screen, give this video a like, let me know where you're from in the chat box, whether it be TikTok, YouTube, Instagram, or I guess those three. So let me know where you're from, or Facebook, I guess, and let me know, are we good? Yep. All right, let me know where you're from in the chat box. Throw where you're from in the chat box. On this live, we're going to cover all this. Going to introduce myself here momentarily, talk about the market, talk about a giveaway, and go over the BRRRS method, which is what I have used to buy $40 million worth of real estate without using any of my own money. What's up, Casper? Let me know where you all from and how many of my lives you've been on. Let me know where you're from and how many of my lives you've been on. So let me introduce myself, and then we will get the ball rolling because you probably don't really give a shit about me. So my name is Sam. I'm a real estate investor. I own a house buying company here in St. Louis. It's going to flip about 300 houses this year. Majority wholesale with some fix and flips mixed in as well. I also own a rental portfolio worth $40 million that I've bought without using any of my own money. So that is why I am here, and that is why I'm going live to teach you that. So make sure to let me know where you're from. New Orleans, nice. Robert, what's up? Let me know where you're from. What questions you have about real estate investing, throw them in the chat boxes. I will get to them before this is all said and done. So we're going to talk about the intro, the market, giveaways, and the BRRRS method. So that's a little bit about me. I also have about 2 million followers on social media, where I teach people every day how to invest in real estate and create new paths for themselves and create wealth without using any of their own money. All right, so that's me. Now let's talk about the market. Who on here thinks the market is going to crash and burn? Let us know. I got TikTok and Instagram down here. Stay here if you'd like. You can head to my YouTube at Sam Fast Freedom if you want maybe a little bit better experience, nicer camera, graphics, wide angle, all that kind of stuff. So stay there, or head to at Sam Fast Freedom on YouTube. So who on here thinks the market's going to crash? Who thinks it's going to go up? And who thinks it's kind of remain level? Give this video a like if you have not. I'm going to give you my thoughts on the market. So here is what the market has done since 2000. I don't think anyone can disagree with this. Since 2000, you know, we had boom, and then we had 07, and then we had boom, little hiccup, little boom, and then it's kind of been doing that, and then boom, we had this little tail. So this is 22. Does everybody agree this is what the real estate market has done over the past, you know, I guess 22 years? I think that's pretty common, obviously not exact, but it's pretty accurate kind of what happened. You know, what's going to happen next? Nobody really knows. I know it's not going to do this forever. So my thoughts are the Fed is trying to get us to this point as quickly as possible without crashing the entire world economy. They're not trying to crash us. They're not trying to dip it. They're trying to get us to a plateau of simple levels. Make sure you give this video a like if you have not. Let me know where you're from in the chat box if you have not. Let me know where you're from and how many lives you've been on. So it is a flat. This is what the Fed's trying to do, and I think they're going to. I think in general, over the next 12 to 24 months, we're going to see a, you know, couple percent up, couple percent down in most markets. I don't think we're going to crash anywhere. If it starts to kind of go that way, I think the Fed would just lower interest rates. They're controlling the entire real estate economy based on what they do with interest rates, and I think they will gladly lower them if things really start to crash, which they have not yet. Sorry, Meet Kevin. There's just no crash. I know he likes to give clickbait videos to suck you guys in, and I think most people that I know have lost respect for him, including myself. But, you know, there's no crash happening. There's no data to support any crash. There's data to support a pullback. There's data to support a potential dip in the near future. There's data to support a lot of things. But we are still double-digit over value over we were last year at this time. Go back a year. We are still double-digit higher than we were a year ago. So it's got to fall a long way and a long way fast to be a crash, and it's just not going to do that. So the market is shifting, but it's providing more opportunities for you and anybody on here than ever before. So that's very, very exciting. Make sure everyone's double tapping the screen. Give this video a like if you're on YouTube. All right, giveaway. Just DM me on Instagram if you want my free training, or go to what's over there in the corner right there. Either one is just fine. And make sure you're following my other platforms. I have a shorts channel here on YouTube. started a shorts channel, so Sam Short, so make sure you're following me there. And I have a podcast, Ordinary Guys, Extraordinary Wealth. It's on YouTube as well if you want to see the videos, but it's also on like the podcast network. So it's a really cool podcast. So Spotify or Apple podcast, whatever the fuck it's called, you can use those. So make sure to follow me on whatever platform you're watching those on. All right, the BRRRS Method. This is what we're going to talk about now. This is the meat and potatoes of the presentation today. Who has heard of the BRRRS Method before with the S? You have to include the S. You can't count that you've heard of it if you haven't included the S. Thumbs up if you heard of the BRRRS Method. Buy, rehab, rent, refinance, and scale. Not repeat. You got to have heard of buy, and I think I'm the only one teaching this because I made it up. I think I'm the only one teaching it. So buy, rehab, rent, refinance, and scale. Who has heard of the BRRRS Method with the scale? Thumbs up if you have, thumbs down if you have not. If you have not, no fear. I am going to talk about it here now. Buy, rehab, rent, refinance, and scale. Who has heard of it? Thumbs up. I see some thumbs ups. I see some thumbs down. I see a little mixture of everything on here. So that's good. Some people have not. Let's break it down into a simple example that I think most people will understand. The math's simple, but it's about the concept. So all real estate investing, the way I teach it, starts out with a distressed property. So what you do is you find a distressed property to, guess what, buy. For this example, let's say you bought this distressed property. You bought this distressed property for $150,000. You bought it for $150,000 and it needs $50,000 in repair. So in order to buy and fix up this property, you need $200,000. Now again, this is how to buy rental properties without using any of your own money. So what you do is you borrow $200,000 from a private money lender or from a hard money lender or your own money or a home equity line of credit or whatever it is. You get fancy and you borrow $200,000 to purchase and fix up the property. You don't use any of your own money. So now that the property is fixed up, you get it rented. You want to make it good debt. You want to get it in the lane of producing income before you take it to the bank. So you still owe your private lender, hard money lender, $200,000, all right? You got the property rented. So the next step is the most important step. You're going to get a new loan at good terms to pay off your old loan. That's a loan. You're going to get a new loan from the bank, a small local bank. They will write you a check for up to 80% of the appraised value. So what do you think this $200,000 property would appraise for? Any guesses on here? Let's say it appraised for, I don't know, $275,000. What's 80% times 275, Jaden? Or somebody do the math on here. 275 times 80%. 275 times 80%. 275 times 80%. 220. So this bought it, fixed it up, you wrote them a check back for $210,000. So they made $10,000, your private lender, now they're happy without doing anything. If this was a real example, which these are simple numbers that a lot of people can do, you will make $10,000 yourself. So you make $10,000 yourself on this deal. Now, you do owe the bank $220,000, but the rent you're collecting pays the mortgage, taxes, insurance, maintenance, everything. It pays it all. I'm receiving enough video to maintain. So what does that mean? $220,000. So then you scale. Do you think we're trying too many platforms maybe? And then you scale. So scaling is a way, because doing it once is great. You got, you got $55,000 in equity. You did it once, you got cash flow. It's great. You own a rental property without using any of your own money. Everybody's paid off except the bank, which you pay off over time. But then if you want to scale and do this over and over again, there's a process to do this. You need to create systems. And again, I have thousands of hours of content about this and other things on TikTok, YouTube, Instagram. DM me Instagram if you want my free training, or just follow me on all the platforms if that's what you're looking for. So scaling and a podcast, Ordinary Guys, Extraordinary Wealth. So you create systems around each step. You get coaching involved. You get some type of coach, whether it be free or paid, whatever it is. You take action, you go out and actually do it and continue to do it over and over again. You increase your lead flow through marketing or ad spend, and then you get extra funding at whatever steps extra funding are needed for, usually the buy, the rehab, and the refinance. So that is in a nutshell how to do it, but let's take this one property and kind of extrapolate it out. It's worth $275 and you owe $220. So you have $55,000 in equity, all right? Now, 15 years later, let's say you put it on a 15-year mortgage. Real estate doubles in value every 15 years. It just kind of is what it is. Even through the Great Depression and Great Recession and all that fun stuff is doubled in value. So this property will conservatively worth $550,000 in 15 years. You will owe zero. So you will have over $500,000 of equity in this one property. That's cool, that's great, that's not life-changing, it's life-altering maybe. So what you do is you multiply that, let's say you did it 10 times. You can do the math, that's 5.5 million. So now you're a multimillionaire a few times over, all by buying 10 rental properties without using any of your own money. It sounds simple, it sounds easy, it's not. It's pretty simple, but it's not easy. You have to actually go out there and take action and do things. It does not happen overnight, but it is possible. It is possible. Western Canadian 55 has no idea what he's talking about. Thank you, buddy. It's possible in any market. The market's still, the market's the hottest it's ever been in general. So some people just don't understand it, and that is okay. So this works in, right now this can be easily done. Interest rates are a little bit higher, but all that does is weed out the competition. That's all it does is weed out the competition a little bit and makes cash flow tight for the next year or 2 or 6 months until you refinance at a lower rate. So we're heading towards another downturn, yes. And guess what? People make a lot of money in downturns. So let me know what questions you have in the chat box. What questions you have in the chat box? You throw it in the chat box or TikTok, Instagram, or YouTube, and we will get to a few questions. Q&As are kind of nice, just whatever's on your mind, whatever questions you have about real estate. I'm sure you've had lots of real estate experience, buddy. All right, how to scale. Well, I just talked about, so I have a podcast episode about scaling. I have a podcast, I was on Bigger Podcast talking about scaling. I have a ton of content on my YouTube about it too. So TikTok, YouTube, Instagram, Facebook, podcasts, those are all talk about how to scale. That's a big part about, so make sure you follow me on all those platforms. What a question? Is it still interest rates? So yes, it's still possible. So when interest rates go up, as they've done a lot recently, cash flow gets a little bit tighter. However, guess what else goes up? Rental rates. Rental rates have gone up an astronomical amount, and everybody's talking about it. So your expenses go up, but your income also goes up to cover most of it. Now, will you cash flow as much as you were before? No, but it shouldn't be as bad as you think. Interest rates go up, it costs you another couple $100 a month in interest, and then you just refinance in 2 or 3 years when they go back down or less. I could see them going down in the spring next year to try and reboot the economy and the real estate market. However, if it doesn't, you can always refinance in a few years when it does go down, because it will go back down. So you might have a little bit tighter cash flow for a year or two, but you are still getting the overall equity gains because the property's going up in value or staying flat. The mortgage is getting paid down by the tenant, so you're still getting equity. And it really doesn't matter after you close on your property what it's worth, because if you're not looking to sell it or refinance it, it doesn't matter at all what it's worth. It's going to go up and down a ton. If you're not selling, it's going to be all over the place. So anyways, interest rates going up makes it a little bit tighter cash flow, but there's still plenty of room to cash flow. All right. I don't know. All right, what question? So Jose says, I have a simple question. So if I own 2 doors, solar rates, why would the first thing get more in the game? I don't know what solar rates mean. What other questions you got? Best way to manage all your properties? I say in-house if possible. We have in-house property management for all our companies, but there's external ones as well. So, all right, Jay Dawn, let's wrap it up.